Our next workshop takes a closer look at the reality of copy trading in 2026, helping traders understand what verified performance really means, the risks behind the blindly following strategies, and how regulation is shaping the space. Leading this session is Abed Al-Hajabi, Business Development Executive at Brokery Solutions, bringing hands-on experience in trading technology and trader education. Please prepare your mind and give a big round of applause for Abed.
Hello, everyone. Thank you so much for the warm welcome. I hope you're doing well. My name is Abid Al-Hijawi, and I'm a business development manager at Brokery Solutions. Today, Brokery Solutions is a technology provider. We provide brokers with technology solutions such as social trading, PAM, ratings module. We've been on the market for the past 13 years, and currently we have over 300 live users, brokers of social trading. So with today's agenda, we're going to be going through the South Africa copy trading landscape. We're going to also be discussing the 3 factors to consider before choosing a signal provider. And then we have the how ratings module can help. You're going to be hearing ratings module a lot today. Ratings module is how we call it in brokery. It's a part of the product where the providers are allocated, and where as a trader you get to choose your signal provider. With other providers it might have different names. And how to verify signal providers, how to scout which are scammers, not, or experienced or not, and so on. So before we start, a quick clarification. Brokery Solutions is a technology provider. We do not provide services for traders, or we do not provide any financial advices. This session is educational session only from the technical back end, just how to show you how you can set up your risk management, how to avoid certain market issues or during certain timings, and just to educate you from the technical back end. So for the South Africa copy trading landscape, South Africa regulators have already, South Africa is actually more advanced in terms of regulations with copy trading and with signal providers. Because in South Africa, a provider has to be regulated by the FSC under the FAICIS Act. People who provide or publish signals must have the FSP license. So it's already regulated, it's already protected by the organization, by the regulators. If we look at copy trading in South Africa, regulators are increasing scrutiny to protect traders from fake Ponzi schemes, styles, social trading practices, or when signal providers claim guarantee return or extremely high returns. So, as you can see here, we have in how it started with the unauthorized offshore brokers, misleading guaranteed profit marketing, fake signal providers, ends up to Ponzi scheme style social trading schemes. So, the retail investor protections. What did the regulators take the main focus is on the regulators and how they regulated. They regulated the leverage, restrictions on Forex and CFDs. They made it 1 to 30 maximum. They capped it. And then we have the client fund segregation. We have the mandatory risk disclosure and negative balance protection. So these things were made to guarantee the providers before the traders start following them. So it's some limitations on the providers. But even with those all of those regulations and all of those precautions that the regulator have took, we still have to verify those providers. And still, some providers could find a way to scam. So scammers are everywhere, which also happened a while ago in 2025. A deep fake video reportedly circulated on WhatsApp, falsely showing the FSCA and its commissioner endorsing an AI-powered trading platform. And that was mentioned also on the finance magnates. So even with all the regulatory, sometimes with the age we live in, with the AI, with the fast technology, still news can spread, fake news can spread. In the same year, the regulator also issued a public warning urging caution against dealing with a certain Forex institute because it wasn't licensed to provide financial services. So with those two cases, we say that, okay, there is regulations and there is protection from the regulator, but at the same time, we have to be aware as traders on how to choose. And now we're going to start with addressing those we call them the red flags, addressing those red flags of providers. When a certain provider advertises themselves or they put out themselves in a certain way, there are indicators that we can choose and we can avoid. So, the red flags of a provider. A very funny name, no? So, first of all, screenshot verification. Lots of providers provide you with screenshots. Everybody knows now that screenshots can be edited, can be with AI even generated. So it's not a guarantee. When somebody shows you their results with a screenshot, this is not a guaranteed result. Nobody knows if these numbers, if these results are correct, not correct, those dates are correct. They can even pretend to be someone else. They can take the work and efforts of someone else and just edit their name on top of it. So a screenshot is never a guarantee. And then the second one that uses selective date ranges. A lot of providers, what they do is, they had a good week last week. Nice. I'll take that selected date, last week only, and this is what I will show to my potential traders that will start following me. But what about 2 months ago? What about 3 weeks ago? What about this week? No, there's nothing. He just got lucky or they just got lucky last week, and that's the selective date that they have to show. And then we have the demo account as a proof. You have to make sure that the results that you're seeing is a real account, real trading. They're not just showing you demo accounts. So, because like even if anyone is trading on a demo account, they can be more loose, and those trades are not really showing off the real trading. The account verification. So what you see in front of you now is from our platform. It's called the ratings module, and this is where the providers are allocated. So these are all just fake names. It's just a demo environment. So we have, for example, the Thomas and Victor, etc., Sarah, and the rest. So in such platform, all the information are reflected from the trading platform immediately. So when the broker installs our solution, this comes as a part of the solution. And when the provider registers into the platform, they get a profile on the ratings module. None of these can be edited, neither by the broker or by the trader. Anything that's on the trading platform is going to be reflected here in information, in graphs, and you can see and view everything in lifetime. So you can see, for example, the average daily profit, return, recovery factor, balance, etc. So with such platform, you avoid all the fake screenshots, all the fake reporting. These are real numbers that cannot be edited, that cannot be played with, and providers will just have to trade on their trading accounts, and whatever will be reflected into their ratings module side. By the way, if anybody has questions while I'm going, please feel free to just raise your hand. The three factors to consider while picking a provider are basically, number one is it constructive or aggressive? Is it constructive or aggressive trading? And again, all of these information are reflected on the ratings module. Number two is how much capital do you have? So misalignment here equals wrong provider. Choice, even if the provider is good. So you might pick a provider. The provider is good, has a very good profit number, have a low max drawdown, but they only trade with gold, which requires high capital. And at the moment, you don't have high capital. So that does not mean that the provider is not good. But what that means is that the provider is not good for you at the moment. This provider does not match your risk taking or does not match your capital. So you need to pick a provider that matches what you can tolerate. And then we have what's the portfolio focuses. So it's also important because in ratings module, it gives you not just the trading information, it gives you in graphs the instruments and the share of instruments that this provider opens the trades with. So is this provider only dealing with commodities? Is this provider only dealing with Forex? Is this provider only dealing with metals, etc.? So also to have a look at the FX or multi-assets and which assets are they dealing with, because all of that will eventually affect also your capital and how much in capital you have into investment. So the top three things to track to prove performance. First of all, I would like to highlight something in the ratings module. If you notice here, there is a heart shape emoji. The ladies will all be very aware of what I'm going to say. This is a wish list. You add to wish list, you add to cart. So when you're online shopping, you like things, you add them to carts. This is exactly what you do with providers. Before you subscribe with a provider, before you start following a provider, you read all the information. Yes, makes sense, but I would still like to list them on a watch list. You list them on the watch list and you keep on monitoring for a week, 2 weeks, 3 weeks to check if their performance is steady. Especially and particularly if they haven't been long on the trading platform, just to also see, because all the information there are reflected in real time. So in a week or 2 weeks time, you're able to determine whether the information there provided is stable and it suits you. So first of all, audited data pulled directly from the broker's server, set the realistic win rates. So don't look for extreme win rates. Look for realistic win rates and consistent performance curve. In the ratings module, we have every information is reflected in curves, and those curves, they go back in time. So they give you the last week, there's the curve, and then the last month, 3 months, 6 months, and so on, depending on how long the trader was there. So it will show you all-time graphs, and it will show you certain periods graphs as well. Now we're going to discuss the max drawdown and the risk management, how to set max drawdown and understand how it works. Use stop loss orders, diversify assets, and reducing position size. So you need to understand what's your level of tolerance for max drawdown, because there might be a provider with a max drawdown of 40%, but your own tolerance is 15%. You cannot tolerate more than that, and that's not the right provider for you. First of all, you need to set what's the maximum limit that you can tolerate, and then based on that, choose the max drawdown that fits basically your capabilities. Second is they use stop loss orders. In our social trading, it's called the risk management tools. So even if the provider has stop loss on his trades, you can still do extra measures by adding risk management profile, and that risk management profile will protect you. So for example, you having capital $1,000, you started following a certain provider, you can set a risk management profile of, you can choose the parameter. Let's assume you chose floating loss and you sat $100 in that floating loss. $100 is approximately 10%. When the floating loss reaches $100, immediately the actions that you choose in that profile will take place. You can choose whether to put the subscription on hold or to cancel, and the trading subscription, what happens to the trade. Whether the trades, they should be all closed the unprofitable ones, or close all the unprofitable ones. So setting that risk management and setting it tight is what could save your funds. Because when you only expose 10-20% of your initial capital, that would save your capital, that would save your money, and that would put you in less risk, particularly when you start following a new provider. So, and those profiles, by the way, those risk management profiles, they can be edited later on. So you start following a provider and then they start doing well. And you'd be like, okay, sometimes they take some extra risks, so I can lower the volume of intensity of that risk management profile. So you increase the threshold, or you set less intense actions to be taken when the threshold is reached. And then lastly we have is diversify and reducing position size. So to try to diversify, try to find a provider who has diversification in the assets that they use. So not someone who particularly trades with a certain asset or a certain Forex, for example, or a certain way. Try to diversify, and also with the minimize of the position size, while when you start following a when you start following a provider at Brokery, again, I'm talking about our platform now. If you're using another platform, the feature still might be there, but it might have a different name. So check with your broker. When you chose the provider, the subscription is inactive until you set up your risk management tools and your subscription strategies, and we offer 4 subscription strategies. And those subscription strategies decides what's the volume you're going to open at your side when the provider opens a trade. So if the provider opens one lot buy, for example, it doesn't mean that you're going to open a one lot buy, because it doesn't mean that you have the same capital. We offer you with 4. We offer you with auto scale, lots proportion, multiplier, and a fixed mode. You can choose one of those modes to either open a lower according to the equations you set, to open lower or higher. So it's always recommended when you start with a new provider to start with lowering position size. So you have lower risks until you start trusting this provider. So risk profile positioning and account maturity. We have things to look at when looking at the ratings module. Account maturity. For how long have they been trading on that platform? And the longer they've been trading on the platform, it shows usually by days. So 300 days, 200 days. The longer you'll have information reflected. The more you'll have things to build your decision based on. And average trade size and duration. And lastly, diversification of assets, which we discussed in earlier slide. How ratings module can help. This is how ratings module can help. Ratings module is basically what gives you the full vision. No need for any screenshots. The provider from ratings module can basically share his ratings module profile, even if you're not a client with the broker. So even if you're not a client with X brokers, they can send you their profile. You can view it even before you register. And then to complete registrations, you go and you register with the broker. So no need for screenshots. You just always view real data. This is how it looks like. It's all demo, so it comes in different shapes and different information reflected. And I think we run out of time for Q&A, but if there's any questions in a minute. And thank you guys for attending.